Yes, sir. Yes, sir. Hey, welcome back, guys, to what we call another zesty week in one of our favorite places to be, the L stock market, guys. Listen, we got some zesty things jumping off with our AMC as we expected with our leave off from last week. I still have some expectations, some levels that I'm looking at to kind of will explain. But like I said, we ended off on a very high note. Everybody kind of saw that massive dip. They came back with that recorrection. All that things just points to factor one that they just used a massive amount of algo trading just to put them back the same spot they started. Not only is that something that we can see, you can kind of see that with how the cost of ball still continue to raise and basically all numbers stagnate. Nothing changed across the board, which is just giving me more of a compelling argument to say that I think that these guys might be in a situation, they might be in a tough, but like I said, we clarified that in the last video with AMC, the ruling was against the settlement, not against the conversion. So like I said, that can always be back in the bando. The conversion is currently halted, which is why we're getting that price inflection. But like I said, y'all got to understand, they trying to work on something in the background. But now, will they have enough time? That's what we're getting down to. But without further ado, bring it in. Restart again. Bring it in. Everybody bring it in. Bring it in. Yeah, got a little wild on the intro. Bring it in. Let's get down there. We don't make this a 50-minute video. But we're going to start off with our first and one of our favorite, Charles Payne, who's basically is talking about what I use as a way of trading anyways, which is sentiment. I look at sentiment. That's why I always in the comments, y'all see me, I say, what's the sentiment? I trade 20-30% off of technicals, the rest off of news and sentiment. That's really the key factor to knowing what's going on. You want to know if FOMO's coming? Sentiment. But now let's get down to it. Charles Payne, take it away for us.
Yeah. So the theme for today's show is second half 2023 rather, on second thought. I mean, take a look at this. This is the financial advisor's bull-bear ratio. You can see very, very bearish. It is rocketing higher, getting near some pretty high levels in terms of bulls versus bears. And these are your financial advisors, folks. So this is starting to come around. And of course, there's the individual investor, retail investor, bullish sentiment. It's been greater now than bearish sentiment for 7 weeks. This is after 15 weeks and 44 weeks. I mean, you went almost 60 weeks bearish, but now 7 weeks in a row, and the gap has gotten really wide. Bullish here, bearish there.
Bullish.
Some think that's a sell signal. That's 51.14% bullishness. Still, JP Morgan, this is interesting because they do this survey with investors, and the question is, are you planning to increase your equity exposure? Look at this. Only 17% say yeah. So finally, I'm going to show you one other chart because this is important as we try to figure all of this out. And I kind of talked about this on Friday, right? This is your fund managers. These are the funds that you put your money into every paycheck. What's been their number one position? Cash. That worked out pretty good at the beginning of the year, but
guys, tying this in, I want everybody to understand what Charles Payne is basically confirming the same thing that we've been talking about this whole time. Where one of the key points of why I'm pointing out the fact that the tech sector rally is going to further continue. We had our rebound with Tesla. Everybody's seeing that it stuck to those key levels of that 250 range and above was bullish for us. Now we're back up at 270, but the funds and big money are overly invested in cash and equity such as that, bonds, yields, things like that, bond yields. So treasury bonds they're not highly invested in the equities. I think that's basically what he's about to go over now. That is going to swap. They've got there's a certain amount that they have to keep to be regulated exposure to all these different markets. They are vastly underexposed in the stock sector, especially tech sector, but stocks in general, and over-invested with cash and bonds. They're holding too much of it, as you can see with this chart.
The lowest position is equities. We know stocks are on fire. Meanwhile, every Wall Street analyst, just about every
over-invested in cash and bonds. Where's my mouse?
One of them.
Where's my mouse? Either way it goes. Over-invested in cash and equities up there. You see the top bar. Under-invested in equities. Look at how the chart is splitting apart on that. That gap has to be more considered to be a hedge fund. They're hedging for everything. So they're supposed to be more down the middle with all of these.
Has changed their minds. Here's the thing, they didn't change their minds. They've made adjustments to the year-end target. Few of them have changed their minds. Only one, I tell you who stands out, though, kind of weird. Cantor Fitzgerald actually sees the market being lower now than they did in January. Anyway, they're all still mostly bearish, even though they did adjust their targets. I want to bring in now Charles Schwab, Chief Investment Strategist, Liz Ann Saunders. And Liz Ann, just about everyone's had to go back to the drawing table, even if it's to find a new way to maintain the old posture. I want to ask, what adjustments have you been making?
Well, keep in mind, you see that we are absent on that list. And that's because with $8 trillion of all individual investors, the exercise, the game, whatever you want to call it, of year-end price targets, frankly, is not really of any significant value to individual investors.
I'm a Swabian as well. And I can agree, I am in there.
A way to scorecard traditional strategists across the investment banking firms, but we don't think that's the right way to advise such a large pool of clients. I will say that in our year, 2023 outlook,
notice how she came on and said, notice that we're absent there. Why? Because they know that you should be investing in assets, in equities. It should not be just holding on to cash. And again, I've just never, maybe I'm forgetting, but since when was cash the thing that we were coming to do investments for, was to hold more cash? I want to turn this monopoly money that we hold on to, that we call a dollar, in an asset or in some company. That's what the whole point of trading is.
The time at the end of 2022 expected what had been the outperformance of equal weight relative to cap weight to persist for the most part in 2023. That clearly was not the case in the first half, initially triggered by the banking crisis. Now we're starting to see a little bit of a lift in equal weight. So I think that's something that sort of shifted in our view from first half of the year to probably not until second half of the year.
But for the most part, then you're still looking at equal weight to outperform.
We think that this broadening out probably has legs, and ultimately it's healthy for the market as you see performance expanding. At the end of May, just coming into June, it wasn't just that the Magnificent Seven, the Super Seven, whatever term you want to use, was significantly outperforming. But at that point, only 15% of the S&P had beaten the index over the prior 60 days. That's now more than doubled. It's around 32%. That's still fairly low, but moving in the right direction. So another way to think about that is equal weight relative to cap weight. And with fits and starts, we think that probably has legs in the second half of the year.
Yeah. Let me ask you about a chart. I saw that you posted this, and it's kind of, how many days we've gone with the S&P without a drop of more than 1%. These kind of charts are intriguing for me, and I think the audience, in a sense that, are we supposed to read these numbers as a contrarian signal or as a sign of bullishness?
Maybe neither. This is just, one of the various ways you can look at participation at breadth. There's no silver bullets with any of this. There's no perfect point at which you've gone X number of days, and then in every instance you see a.
Guys, this lady is keeping $150 with you, which is why I tell people that they can over invest in the stock market trying to do too much. Hey, my technical RY clef 7 is, guys, that's not what the trading is. Don't get me wrong, those are tools that we use to kind of more make more precision with our trade, especially the fact if you're doing shorter term trades or day trades or swing trades. But as far as long term, there's a lot more that you look at as opposed to just these technical analysis. And like she said, there's no really way to just pinpoint what's going to happen in the market. And when you think that you are going to pinpoint it, that's when the market's going to hit you with a right hook and send you to sleep.
Rolling over there, but it is one sign of the market.
Don't try to outplay the market. It's dollar cost average. You find good companies you like. You find a good price point. Do you dollar cost averages on long term? On shorter term plays, you got to know what your range is, what range you've been bound in, what's going to force it. If there's news, those things like that.
Been overbought here. Markets can stay overbought for an extended period of time. Sentiment can stay stretched for an extended period of time. That's why, even though they're important tools to have in the toolbox of assessing market conditions, there are no magic bullets in terms of any type of breadth indicator or sentiment indicator. If they were, then wouldn't this be a lot easier than it is?
I think there's so many of them, right? I remember when I first started doing technical.
She's so logical, it's hot.
Analysis.
I think I got something for Cougars. I don't know.
Like 12 buy signals, 13 sell signals, and 4 punts, right? That was
Liz,
always
you
back
better
at square
drop
one.
something new now.
Before I let you go,
Stick
last
around
week,
long.
investing styles. Small caps really starting to come on. Small cap growth outperformed mid and large. Small cap core outperformed mid and large, and small cap value outperformed. Small caps coming on. The Russell's been up 7 weeks, coinciding with the bullishness of individual investors. A lot of folks are saying maybe that's where the opportunities are.
Probably, but here's a tip, and I don't give.
I don't know if she's going to say this, guys, but I said this at the beginning of the year, and that's why I put down there the retail saga is just beginning, guys. Retail is not going away. Even with this thing with AMC, understand that the market has had to adjust for the individual investor, and there will soon be a time where institutions, much like they're already doing now, follow behind retail moves. It's just that they are frauding us out in our plays, but they're in here because of retail. There's no reason that institutions be in AMC if retail wasn't in AMC forcing that. So that's what I'm trying to say when I say with these big moves where we're saying NVIDIA up 200%. That's individual investor money spiking those moves. Y'all have not even seen institutions buy in yet.
Tips in the traditional sense all that often. Russell 2000 is the most common benchmark used for small caps, but it does not have a profitability filter, and it's got a pretty high percentage of stocks that don't have profits as a result. The forward PE is about 24, 25 on the Russell. Mm-hmm. The S&P 600, very well-known index, obviously, index provider, they have a profitability filter. So if you're, and as a result, the forward PE is only 15. So it's more of a tip if you're either an index investor or you're looking for sort of a starting point at the index level for ideas, just be mindful of the fact that you get that higher quality sort of characteristic to an index like the S&P 600.
And I've been trying to do the S&P 600. You know what? It's a great point. I should use it more. I think to this point, the best performer in the Russell 2000 is Carvana, right? So, I mean, listen, it's up huge about 800%, but they ain't making no money.
Missed that Carvana. Who was, there was a YouTuber, I forgot who it was that was screaming about Carvana. You got to give him his props because he was calling that he was going to do a move like that. But I missed that move. I got the news probably maybe like a week ago that it was up there because I think the move Carvana moved from somewhere like $5 up to like, $40. But that's why I say, guys, there's a lot of money being made around right now. The time is now to be putting those assets down to get allocated in banger plays. Not to say Carvana's banger play, but Tesla, NVIDIA, Microsoft, Netflix, Amazon, XRP, Bitcoin, Ethereum. Guys, there are generational wealth trading things, Apple, that are coming up that you should not be missing out on right now. There's too much money. 800% on Carvana.
Lizanne, thank you so much. Always appreciate it.
My pleasure. Thank you.
Yeah. Charles Pizzle. What's going on up here? All right, people. Let's dabble down and get down to the nitty grits right quick. Wrap this up real nice and tight. All right, pulling on through, guys. We're looking at our AMC 585. We finished up 32%. Obviously, everybody knows we started off the pre-market at, I didn't actually see, let me see if this is correct. At one point, we were around about $7 in pre-market. Yeah, here we go. That's where our range was. By the time we got an open, like I said, I actually bought some more into the AMC, but I played this perfectly because I knew that 9:30, 10 o'clock range, they were going to come in. That's the time they were going to try to come in and just smash it. 8:30 to 9:30 is all selling hours. Anybody that day trades knows this. By the time pre-market kicks open, if you still holding this stock, you're probably going to get wrecked, especially if you're holding stocks that's up 200, 300, 400% in. Those do happen. If you don't believe me, go to Webull and go look at the daily movers in the morning, and you'll see stocks that move 200, 300% that people are trading on a regular basis. And it'll be all retail in there too. Like I said, come 8:30 to 9:30, they're wrecking us because it's almost like they really can't. Not supposed to be able to short us or hold us down the same way through pre-markets. Now, when those regular hours come, they can play this foo-foo game, and that's basically what we're experiencing with our trade right here. But nonetheless, we still had a Powerball move bouncing back up, and then everybody noticed. Let's see this right here. Everybody noticed this. This happened, and it's showing for different things. Some people said they saw 6. I saw this, what I'm seeing right here, which was 8, just guys, randomly. A spike up to $8.59. I had to cue this in to get this recorded so everybody knows this is a massive indicator. It's the same type of pops and things in massive candle glitch that were happening prior to all of our previous runs, which is basically showing you what the price should be and how much they're suppressing these with algos right there. But I want everybody to note this. This thing popped up right near the end of close at up to 850 in one bar. Guys, this is the 15-minute chart. So this ain't like it's like this is a daily. This is what the candles look like. Out the current. Okay. Guys, I think it's gonna get a little zesty. We're not we're staying what I say, emotionless with the trade, but obviously, like I said, we're just stating the facts that are occurring with it. Guys, again, 0% shares available. They've been borrowed today. It's actually above 1,000, but this is what the last few bars have been at, where they've only got 30, 45,000, 15,000. And of course, all these shares are coming from their fraudulosa, and then they stealing people's shares with the share lending program. Some people don't have the share lending program turned off. But still, they've been borrowing at 991% all day long. All the way up to obviously only zeros you see is when they weren't able to buy shares, but they bought even 100 shares at 1,000% cost to borrow. Guys, this cannot continue. Something's going to break, and they've got to give. Looking at a 56.3% short percentage. We still left off, remember, last week on the threshold list. We're waiting for tomorrow to get the days reporting. But like I said, I'd assume we're on the threshold list, guys. We've been on the threshold list going on probably about 20 minutes. I mean, I say 20 minutes, probably 20 days now. We're supposed to have been past where we're supposed to force some closing and buying back. So like I said, they've got that on the back burner. This is where I always say, hey, we're not trying to get taken out or anything like that. I don't want to end up on a submarine or something, but your SEC is complacent. They know what's going on. So when I tell everybody this is the battle of us versus them, this is what I mean by that. There's no way for this to not be recorded. This stock has been on it for 20 days now. Looking at our Ortex data, short interest, 27.99%. That's 34.39% of the free float. Looking at an 84.8% utilization. Days to cover has dropped down a smidge to 9.56, but still sitting towards all-time highs on all those numbers. Short squeeze score is sitting at a 94.89, which is still ridiculously high. Guys, the thing is bubbling, and we're just sitting back here waiting to see what I asked for was a delay. She didn't say no to conversion, but them on the clock right now, they were pushing all this up to that last second. I want to see how they're going to try to pull this one off. I don't know how they could. I personally see more higher price actually coming through because, like I said, even going with that chart, being above that 550 range is what I said previously. And all my bars have been hitting to the flickered. I want everybody to see my look at this. Taps. But what I've always known was getting past that 550 range, right, was what was going to be my indicator. Be like, all right, listen, that thing is moving a little bit. Now, of course, we've fallen a little bit below that, and after hours we're sitting at 530. But like I said, pre-market still closed, but the close was well above that anyway. So I was looking for that in the close. What happens after hours is irrelevant to me because, like I said, as soon as you open up tomorrow morning, you go look back up and be like, oh, we're back up here again. There's no way for them to continue this down without alleviating some of this pressure. They've got too much pressure. Threshold list, cost to borrow, short percentage, short interest. Hey, and now again, we know that they're market makers. They can do what they want to. But like I said, this is a doozy. That would give me a headache. Trying to wake up, try to solve this. Further proof that we are following up on, I think this was AMC to the Moon is his name on Twitter. But we've been following each and every single day as they are offering him more and more money. Guys, they are now offering from Fidelity 142%. Of course, obviously today's date. Interest for them to borrow out his shares. Even he said what I said at the time before. He said, I don't know the current cost to borrow from Ortex is. And IDGAF, everybody knows this. Fidelity is offering now over 142% to borrow these AMC shares. If we see 150% and less, or the hypothetical income is at a certain amount, I'll stop censoring that. with AMC doing what it do, I'm good. Now I don't know if he's saying what I think he's saying, but I think he said that hit 150, he gonna have to loan some of them shares. And in all honesty, I can't blame you. If they're saying that they're paying him 150% of what he has, and if they saying that if he had $10,000 in AMC, that by the end of the month they would give him another $10,000, well, that'd be more than $10,000, $15,000. Hey, I don't blame you, brother, but it's the fact that they will offer him. Well, realistically, he's still getting shammed. He should be getting whoever they're loaning them out to, they making another 800% off of him still on top of his head. I would hold out to 300%, 400%, but nonetheless, guys, you can tell how zesty it is getting. Fidelity is continuing each day to offer this guy more and more and more as the day goes on. This is compiling in the background. Yes, they're shooting all this off to the dark pool, but there's still something that's keeping count. There's still something, which obviously, like I said, we know the synthetics we made, but there still has to be, you're borrowing somebody. Somebody's is holding that hot potato. Who? We're not sure, but somebody's holding that hot potato. Put it on through, guys. Just to end off, guys. Obviously, everybody saw Tesla's following those key levels. We said 250. Above 250 was bullish for me. We're clearly above it. To be safe, it was 247, but we just called 250 to keep it tight. 250. She's made that bottom, swinging back up there at 270, climbing back up to that all-time high. Guys, that's called strength, baby. But without further ado, let's take a look at what you could be investing in. That was supposed to be like a drip coming down. I need this.
Damn.
You talking about thoughts on yachts?
Really wide. It's like, damn, it's huge.
That thing looks so good. I ain't gonna lie to y'all guys. I don't know, for some reason, I don't know. It might not hit for y'all the same way, but this is some heat. 1,000 horsepower. Just imagine you pull up. This is like almost like the Hummer when the Hummer H, was it H2 or H3? I think it's an H2, whichever one, the big body looked like literally a Humvee, came out, how that would pull up. You like, this is what I'm getting from that. Hummer electric vibes, but better. Look at this sexy sleek. Metal is damn near impenetrable. That's the bed that slides out. This actually closes down the whole thing.
Damn.
So you can enclose the whole thing.
It's like really wide.
Hey, but like I said, y'all can miss out on y'all money. You don't need to go into Apple, the Apple Bank. There's also make the electric car, or the Tesla stock. There's going to be the entire electric grid, probably your cell phone, because they got a satellite up there. They got the space station. They changed Twitter to now X, which I don't know what that ties into. I don't know. I didn't actually watch into it, but I know Lou was talking about X Force, and he said, I seen one of his videos said something with Elon, but I never actually got around to actually looking at it. But I don't know if he's actually, I don't think that it has anything to do with XRP, but that would be nuts. He did put the Doge token up there one time, but like I said, I'm just talking. I don't think that it has anything to do with XRP. But I mean, why would he pick? What does X have to do with Twitter, though, is my question. But like I said, we'll be here for a million days trying to figure out what Elon Musk is thinking. Like I said, you got enough money, Elon, just keep pushing my money up, baby. You can do whatever you want to do. We right here beside you, baby. Listen, guys, without further ado, guys, we're going to close this thing out. But like I said, salute to everybody in the market. Salute to each person that's taking that step forward of building your career, putting that foundation away. To salute to each person that's taking the sacrifices of skipping out on this, and getting the 2 Big Mac meals instead of getting 1 so you can put some into your investment portfolio. We're building generational wealth. I guarantee, guys, we already too plugged in. It's time plus experience in the market that makes you a perfected trader. Stick into it. Stay along with it. Like I said, over at the Money Montgomery, we're going to be leading you straight to the money. But like I said, we already have a lot of assets down that I'm telling you within this next 5-year range is going to change lives. Wife-changing, life-changing, family-changing money, as we keep saying. But like I said, guys, y'all already know what's next, don't you? Hey, things will get zesty for AMC. Things will get zesty. That pop, that little pop, I don't know what they call it. They call it a glitch. I don't know if that what those. I think that's a glitch for it to go up in one bar. But you know, we're going up. It's getting a little zest out of you. I'm looking for that break above. Let me just so I can put this down here again. Just call my key level. I'm looking at, because I know people just saying $8. This is what I'm looking at first. Just like I said, above that 550 is bullish. But once we break above 640, 650, that next level is going to be that fling to $8. And like I said, from 8 to 9 and so on and so forth, guys. That thing will be clipping dollars. Like I said, that's how close we are. Like I said, we had a pop almost up to that range. So you know what's next now, right? I'm bringing that heat with that music. Yes, sir!